Bitcoin years are dog years, right? But so much stuff happened, like the all-time high before the halving. The halving itself, the ETFs, and its very successful launch. Miners margins hitting all-time lows. Network hash rate hitting all-time highs each month. And yeah, breaking through to barriers like 600, 700, and even 800 exahashes towards the end of the year. So yeah, it's been really an impressive year if you look back.
Welcome back to the Compass Mining Podcast. My name is Jarrett, and I am joined today by Nico Smid. I hope I got that pronunciation right. Nico is a dear friend of Compass. He has been hopping on Talk Mining Tuesdays with Brad James and myself. If you are in the Bitcoin mining industry, you probably know about Nico. He has recently today dropped the Bitcoin Mining 2024 review, and that is what we're going to look at today. Before we even dive in, know that if you want to read that report as well, you can go and click the link in the episode's description, and you can check that out too. It's around 70 pages of just alpha, and this is the type of content I am excited to dive into. So, Nico, thank you for hopping on the pod.
Thank you very much for the invite.
How's life? I believe you're down in Argentina.
Yeah, life is warm. It's summer here, so it's in the middle of summer. So for me, this time is always a bit weird, like Christmas, New Year's. I grew up in the Netherlands, where it's cold and dark around this time. So it always feels a bit weird to celebrate the holidays in the shorts, let's say.
It sounds weird, but for me, it's an absolute privilege. I've only had a couple Caribbean Christmases due to where I was in life, and it was absolutely amazing. This Christmas, I was up in Vermont, which I'm sure would be more like the Netherlands, where the sun goes down by 3:45. Yeah. It was exceedingly cold, and but it was very wintry wonderland. There was snow on the ground, so it felt, I guess, like the classic Christmas, and definitely maybe what you were raised with. But let's go ahead and dive in. So this is called the Bitcoin Mining 2024 review. And what we're going to do, this thing is super dense, and I hope that everyone listening gets a chance to go and check it out. We're going to just kind of run through the report, and Nico's going to kind of call out some of this stuff. And one of the things I think we should call out before we get going is two things. One, sponsored by NiceHash. We've had Marco from NiceHash here on the pod. Mm-hmm. Marco's great. What NiceHash does for the industry, I think, is awesome. And then the other thing is you actually have a co-author, Cindy Fang. So we will also be talking about some of the work that was done by your co-author as well. So
correct.
Let's actually, before we dive in, talk to me about the genesis of why the report. Where did this come from? Was NiceHash like, Nico, you got to do it, or are you like a NiceHash?
No. Like it's so a big part of my of the work we do at my company, Digital Mining Solutions, is market analysis. We focus a lot on education and doing market research and providing master classes, etc. And we have a popular newsletter that comes out every week, whereby we look at mining economics and then innovations in the space and trends. And last year I did an annual review, which was downloaded quite a bit. So I know there's a need for it, or people like it, enjoy it. And that's why I wanted to produce another one. And I met Cindy a while ago, and she focuses on public companies, does the same things as I do, but from another angle. So I think we add value to each other. So decided to collaborate with her. And NiceHash is a sponsor of my newsletter, so it was natural for me to discuss this plan with them, and they've been very supportive of my work. So that's really nice.
Well, shout out to NiceHash. I think any company, including Compass, that is very education focused and trying to inform people in the industry is great. So let's dive right in. And as I pass by the executive summary, I'm not going to dive into the executive summary. I kind of want to ask for you, what's the TLDR of the report? And did you learn something by writing the report that you didn't know before?
Well, since I write on a weekly basis, there's no surprises there. But I think while writing it, it surprised me how much has happened in 2024. It's really amazing that Bitcoin years are dog years, right? But so much stuff happened, like the all-time high before the halving. The halving itself, the ETFs, and its very successful launch. And then miners margins hitting all-time lows. Hash rate, network hash rate hitting all-time highs each month. And yeah, breaking through to barriers like 600, 700, and even 800 exahashes to the end of the year. So yeah, it's been really an impressive year if you look back.
It has been an impressive year. We did a review episode with Lee Bratcher from the Texas Blockchain and
Yeah,
thinking about all the things that have happened in the industry. And then for us at Compass, so much has happened this year. We've had a remarkable year and we're continuing to get new facilities opened, hash online, and it's many of the things that you call out, that the growth is growing in difficulty and hash rate and Bitcoin price in overall sentiment. So let's go ahead. The first one is called State of the Network Blocks in 2024. And you just kind of start with the halving. Most people who are listening to this are fairly Bitcoin native, so they know what the halving is. We don't need to dive into any descriptions there. I think most people know about the rare sats and just about that. But is there anything that we should say in this moment to review from the halving that maybe surprised you or stuck out or was atypical? You called out that, yeah, Bitcoin for the first time hit its all-time high before the halving, which definitely was not congruent with past cycles. But is there anything else we should kind of call out?
yeah. Well, I spent the halving very different from previous years, I have to say. This is the third halving I'm going through, and I was watching mempool.space, like was watching the blogs live, which I think tells something about where we are as an industry, right? Like the information and the data out there has grown enormously. So I think that was fun. It felt kind of being a big Bitcoin nerd, but I enjoyed the moment. But I think what's really different from this halving, if you compare to previous halvings, is that more and more you see that transaction fees surpass the Bitcoin subsidy. So the block rewards consist of two elements, right? So the block subsidy, which is now 3.125, and then the transaction fees. And at the halving, there was a huge battle for block space, and there were something like 37 Bitcoin in transaction fees, which is enormous. So I think that's worth mentioning. And we saw another few moments in this year where the transaction fees were bigger than the block subsidy, and this will be something that's going to be more common in the future. And also what how Satoshi envisioned it, I guess, right? Like starting off with a high block subsidy to appeal miners and to make the network secure, and then slowly transitioning into a model whereby miners make their money through transaction fees.
That's it. Yeah. And you outline that in the report. Great work. The next section, as we move on from the halving, which was obviously, if you fast forward 20 years ahead, I think the two biggest things that will probably be remembered around 2024, in my opinion, will be the ETFs and the halving. Those are the two like huge moments for Bitcoin and then Bitcoin mining. If you fast forward though, we are now hitting what is super salient for all Bitcoin miners, which is network hash rate. Talk to me about network hash rate growth in 2024 and what are some takeaways from the report that people should really be thinking about?
Yeah, I think what we saw was a record amount of nominal hash rate that was added to the network. So we started the year at 515 exahash and finished the year over 800. So 292 exahashes were added. If you compare it to last year, 2023, so that's 2 years ago by now. In 2023, there was 250 exahash added, so a similar growth, let's say nominal, but then the percentage back then was like it almost doubled the hash rate, and now it's 50% that's added. So also there, I think it's interesting to note, and that's reflected in the difficulty adjustment as well. that increased a bit over 50%. The bigger the network becomes, the harder it is to add these percentages, let's say, even though the nominal amount of hash rate that's added is very significant.
One of the things that you outline here, and I don't know if I've ever seen it written this way or with this word, capitulation. That is a word that I feel like I hardly ever use in English, but do you want to talk about that? Because I do think that with the halving, it was definitely a competitive Machiavellian moment for the entire industry where we could say there was some capitulation. Do you want to talk about that?
Yeah, so I work with this indicator which is called the hash ribbon indicator. And it looks at two moving averages of hash rate, so the 30 and 60 moving average. And once the 30-day moving average crosses below the 60-day moving average, then we go into what we call a minor capitulation. This is usually a phase where miners get crushed and go offline. Many go bankrupt. And this time we saw that indicator showed one of the largest or longest minor capitulation phases in its history. One bigger was the one of the Bitcoin or the China mining ban in 2021, whereby a lot of miners switched off and migrated elsewhere in the world. So it's quite impressive. But I have to say I didn't see as much bankruptcies, let's say, as I expected. I think in 2022 we came out of the 2021 bull market, and there was a lot of funding going around, a lot of future orders being made, and infrastructure being built. And in 2022 you saw a hash rate growing very fast while Bitcoin was the price was tumbling, and I think many companies were crushed at that in that year, and therefore like there was like kind of a range, let's say, and many companies were healthier, let's say, going into the halving. And I also believe that miners got a bit more sophisticated, so we saw quite some fleet upgrades going into the halving, and then also miners that put their machines in low power mode. But yeah, quite some hash rate came offline. If you compare to the previous halving, the percentage that came offline is maybe less, but the nominal amount was much bigger. So it was over 70 exahashes that came offline right after the halving. And in the previous halving in 2020, that was 30 exahashes. So quite some miners went offline. Hash price, so that's the revenue per day, went down quite a bit. And there's this level of $60 per petahash per day. So when hash price went below that, then a lot of miners were switching off.
Yeah, thank you for taking the time to kind of call that out, because I do think that that's something that I don't want to say define 2024, but because 2024 is a halving year, that's always going to structure the way the Bitcoin economics are, both I would say 3 months to 6 months before and 3 months to 6 months after. And in many ways, I think only in the last month and a half do I feel like are we kind of out of that post 6 month hangover of the halving, which has been great. Moving on,
maybe to elaborate a bit more, like we provide brokerage services as well, so we help companies find sites. And what I've seen is that last year there was like a big rush to get new sites and to get online to benefit from that block subsidy, which was still at 6.25. The months before the halving and right after the halving, it was really quiet on that space. Let's say there was very few companies looking for new sites to grow, and that has been picking up later in 2024 again. So I guess miners were also in a wait and see mode, see like where will hash price end up, where will it bottom, and what will happen with the market. And then later in 2024, more miners became confident to start exploring and investing in.
Yeah, the summer of the halving year is always kind of a lull, and we saw that this year too. And then the second we got from September through the new year, Bitcoin price also just absolutely ripped and exploded. So that was a good thing. But we will get on to Bitcoin price. I don't want to jump the gun. I was going to say the next part of the report, which we can move into, is geographical trends. And I want to caveat this by saying, for me in 2025, the trend I'm most looking out for is the sovereign adoption of not only Bitcoin, but Bitcoin mining. I think that Bhutan has totally set the playbook. And it's like, if you want to figure out how to mine and take mining and use your natural resources and see this as the new way to create value for your GDP, here you go. The same way Sailor has kind of created that maybe for public companies that are trying to put a reserve on their balance sheet. I feel like Bhutan has done that. So I really enjoyed this section here about geographical trends, but please talk to me about the geographical trends. Talk to me about the rest of the world, because as we know, and as you say, the United States remains the undisputed leader in Bitcoin mining, but the global mining landscape is far from static. Emerging regions like Africa and South America are increasingly leveraging underutilized and stranded energy resources.
Yeah, so I think there's a lot of abundant energy out there that's not being utilized. And like Bhutan, there's other countries like Ethiopia, for example, that has really build out this mining industry. They welcome miners with open arms. And in Ethiopia, according to Luxor, who did some research there, there's around 600 megawatts of equipment running, which is very impressive because I believe the total consumption is around 23, so that's 23 gigawatts. So that's about 2.5% that's running in Ethiopia, and they only started like end of 2023 to build out in a serious way. So it's not only Bhutan, you see it also in the Middle East, where governments are very open to receive miners and collaborate with the energy sector to build out this sector. And you see it also in South America. Here in Argentina, so I'm based in Argentina, you see that there's miners using stranded gas, and there's one company, Genesis Digital Mining or Digital Assets. They mine with EPF, which is a governmental oil and gas company. So you see it worldwide in different shapes and forms. I guess Bhutan is a prime example, but there's many more out there.
Yeah, there are definitely many more out there, and I even love what you wrote here, saying that Bitcoin mining can add 2 to 4 billion annually to Ethiopia's GDP, serving as a blueprint for other African nations. That's the way I see Bhutan more on a global level, but I think it's also really great when a region kind of has the example that you can look up to. There's Bhutan, Africa maybe has Ethiopia. I think for the United States, it's like looking at the region of Texas. I mean, I just think that with ERCOT and everything they're doing. So this is a really cool section for you when you look ahead at 2025, and I'm kind of jumping the gun. I know there's a 2025 outlook. And knowing that you European roots, but South American based, is there a region that you think over the next 5 years is going to surprise as far as megawatts being brought online?
Surprise, I don't know.
Or what would surprise you? If I said, hey, Nico, this region's blowing up, what would you be surprised? And I guess,
well, if Europe blows up, that would surprise me, because
that's what I was going to say. I think that's the only real surprise.
Yeah, but so in Europe, you see mining mostly in Scandinavian countries, where they reuse the heat for district heating or agricultural purposes. Otherwise, energy is just too expensive. I think if Europe managed to understand that you can use mining for load balancing, for example, that will be a very positive surprise to me. I know there's a lot of wind and solar production in Europe, and the grids are not always able to cope with that peak production. So if the Europeans, if the politicians in Europe can open their mind and see that Bitcoin mining can be a tool for energy management, and it's not necessarily an enemy of the state, that would be a positive surprise.
I hadn't, when I had asked the question, I hadn't seen that was such an obvious answer. But yeah, if Europe was all of a sudden like, I don't know, we casually put 40 exahash online, I think everyone would be like, what is happening?
Yeah.
Moving on to the next section of the report is network efficiency. This was one of the more interesting sections of the report because I think looking at specifically at ASIC hardware and just at hardware limitations right now is becoming really interesting. Moore's law plays a factor. I was talking about that earlier with just, how efficient can this get and where are we going to continue to go to find more efficiency? So please talk to me about the network efficiency.
Yeah, so Coinmetrics has some really nice analysis about this. So I would recommend to visit their site. And there you can see they have a chart representing the efficiency of the overall network. And what's interesting is that you really see it flattening out. And this year, my expectation was with the halving and with these new sub 20 joules per terahash machines coming out, that the improvement in overall, like the average network efficiency would become clear. But it's been quite flat throughout this whole year. But if you look a bit deeper, you can see that the introduction of newer generations machines always takes some time to show its effect, right? So in 2022, the S19 XPs came out, which had or have 21.5 joules per terahash efficiency, which was quite a big jump from the previous S19 and S19J Pro machines that were around 30 joules per terahash. But it only it took 2 years for these XPs to have a significant footprint in the network, in the overall network. So before these S21 generation, let's say the sub 20 joules per terahash generation will have an impact. It's going to take another year or a year and a half, maybe even 2 years, because these machines need to be produced and then deployed. And it just takes time and effort to do that. So I think that was like in hindsight it makes sense, but I thought there would be a bigger improvement in network efficiency. And indeed, as you mentioned, like that efficiency improvement the rate of improvement is flattening out, and it has mostly to do with the chip size. The first end miner, the S1, had a 55 nanometer chip, and now they work with 5 nanometer chips. You see MicroBT working with 3 nanometer chips. So the smaller these chips become, the higher or the more sensitive they become for failure. The more difficult it's going to be to produce these machines without a high failure rate. So there's a limitation to the amount these chips can shrink further, let's say, but there's been efficiency gains mostly made on the cooling side. So you see, especially these hydro-cooled miners, they are able to produce a high hash rate output while maintaining a low level of efficiency, or high level of efficiency, low level of joules per terahash.
Yeah, absolutely. And while that was one of the shorter sections in the report, like I said, I think it's one of the more fascinating because we are seeing that leveling out of efficiency, or what the joules per terahash. But that doesn't mean that we won't figure out a new thing. Because like you said, we started out with 55 joules per terahash or whatever it was. And
the joules per terahash, like it started out like thousands of joules of terahashes, like with the first ASICs over a decade ago. So. But we're entering a phase where improvements are getting harder and harder. BitDeer has a roadmap for their Seal miner, and they expect to go sub 10 joules per terahash in this year. So looking forward to see that. But after that, like it's gonna be difficult to. It cannot be zero, so at a certain point it will stop, I guess, and stagnate. And efficiency gains will come mostly from infrastructure side, so improved cooling and improved operations, let's say, software that helps optimize your operations.
Yeah, I didn't realize, but it does make sense that the original ASICs. Do you know what the first or the first ASIC that you can think of, what its joules per terahash was? You said thousands.
Yeah, it's in the report. I don't know it by out of the top of my head, but it was Avalon that came to market, but it was still in the gigahashes per or joules per gigahashes. So lot has happened since then.
A lot has happened. As we move on, the next section is mining economics. And as I alluded to a little bit earlier, we dive right into one of the factors into the mining economics, which is Bitcoin price. It just feels like in 2024, especially as you zoom out and you look at the charts that you have here in the report, it's just kind of like up and to the right. Beyond that, anything else to really say?
Well, yeah, I think that all-time high before the halving is noteworthy, and then the 100K, of course, right? Like that's been, for how long have many people have put on these laser eyes? It's been a while, so we've been waiting for the 100K for a long time, and I think it's interesting also to see that once Bitcoin passes that 100K, it also passes the 2 trillion market cap. And Bitcoin ended the year as the 7th biggest asset in the world. And in 2024, it surpassed silver. So I think also at the market cap level, it's interesting to see that Bitcoin is eating other assets, right?
It is absolutely eating other assets. You talk also about here, I don't think we really need to dive in. Most people who are listening to this probably are aware of some of these narratives. The Bitcoin ETF, that was obviously a narrative. We've already kind of talked about that. And then you have a little section here that says institutional buying, the MicroStrategy playbook. Most people are kind of attuned to what Michael Saylor is doing over at MicroStrategy. The next section, if it's cool, I'd love to go to the next section. We have the network difficulty. This is another part of the factor that plays into the mining economics. This also feels like similar to Bitcoin price. It has a similar story up and to the right, but please add in some more flavor on that.
Yeah, so like hash rate, it's very closely related to hash rate, right? Like the more hash rate comes online, then the faster the blocks are being found, and then the difficulty algorithm gets adjusted, and it tries to fine tune it to the 10 minutes, let's say. So as hash rate has been going up, difficulty has been going up. You see that in the year there was kind of a dip post-halving. It took a bit, I think three difficulty adjustments before it went into the negative. So first, miners were still hanging on, let's say, and then they started to go offline. It's also noteworthy that the halving happened the 18th or the 19th of April, and its effects into the summer also accumulated with miners having to curtail because of the heat. You see, especially in Texas, you see when it becomes very hot that there's miners that participate in demand response programs. So if the grid or consumers on the grid consume a lot of power, they need to power down. But there's also miners that in the summer they slow down, they power down their machines to prevent overheating and damage to their machines. So I think that dip in hash rate growth and in difficulty adjustment post halving was a combination also of these squeezed margins, and then some miners having to power down or to shut off their machines because of the summer heat.
As a visual learner myself, I love the image you have here. It really breaks down the increase. It's a line chart, but it's fascinating to see that in 2023, the hash rate increased by 100% and by 36.7 T. And then in 2024, it increased by 50% again. This is crazy. And it increased by 37.8 T. So not only did it increase percentage-wise or it increased nominally greater. And that, I mean, it's just, that's an astronomical amount for what I would say the bear market to kind of increase. I don't know if people in 2022 would have seen that. Would you have sat there and bet that that would have happened in 2023 and 2024?
No, it's really massive. In 2022, it was 11 trillion that was added to the difficulty. So it's 3 times more in the years that follow, or almost 4 times more. So these last 2 years, hash rate and difficulty have really blown up. Let's say way more than we saw in the past.
Yeah, it's been wild. Like I said, just like Bitcoin price up and to the right. Moving on, we get into hash price. Hash price is determined by network difficulty, block subsidy, transaction fees, and Bitcoin's price. Most people listening have an idea of kind of what hash price is. But we did, the first thing you start out with, there's absolutely, let's go right with the truth here. We did have historic lows. So do you want to talk about the historic lows and then kind of how the rest of the year played out?
Compass Mining makes Bitcoin mining accessible to everyone. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary services. Start mining in as little as 48 hours with our turnkey hardware online and mining directly to your Bitcoin wallet within 2 business days. Discover more at compassmining.io and see how we can power your success.
Yeah, so hash price is usually measured in dollars per petahash per day. So that's a revenue per petahash, which is 1,000 terahashes, right? So machines are usually measured in terahashes, and then a miner fleet is being measured in petahashes, so 1,000 terahashes, and then we look at the network in exahashes, maybe in zettahashes in the not too near future. But yeah, the hash price got impacted quite severely by the halving, which is logical because that block subsidy is a big part of what determines the hash price. It got down to $38 per petahash per day, which is a record low, and it's been at that low level quite a bit. It even revisited that level. I think the first time was in July or something, and then in August again it revisited that low level. So that makes it really harsh for miners to stay online. I guess many have learned from previous halvings and know that better times are coming, and might even mine at a loss in anticipation of the more profitable times coming. But if you compare it this halving to the previous one, you see that hash price is suppressed for a longer time also. So I think more than the depth of the record low, I think the length of these low levels of hash price is more impactful. Like how long can miners hang on with small margins? So the previous halving in 2020 happened on 11th or 10th or 11th of May, and then Bitcoin price started running in December, and that's where hash price got back to its pre-halving levels. Let's say that took a bit over 6 months, and now we're already 250 days plus post-halving, and we're not near that pre-halving hash price level, which was $103 per petahash per day if you don't count the big spike at the halving. It's I think more than the historical low, it's the length of these lower levels that's hard for miners.
Just continuing right along, next section, transaction fees. You already kind of mentioned this, that post the halving, and we're talking about the halving, there was a spike in transaction fees, inscriptions, tokens, the rare sats, having block worth over 40 BTC. That was a crazy time. Anything that miners listening to this, should take away from that moment? And do you think that there's some themes there that could come back when it comes back to transaction fees? Because the story in my head is, as Bitcoin price appreciates, as ordinal communities, runes communities, all the communities that are kind of built more around the collectible or the quote NFT type of Bitcoin elements within the ecosystem. Do you think that's is that a narrative that we saw around the halving that could come back and boost transaction fees for miners? I guess that's a lot more specific question.
Yeah, I guess it can happen, but it's hard to plan for, right? Like it's such these are spikes that happen very quickly and they fade away very quickly. The end of 2023, we saw some more sustained higher transaction fees, but it's difficult to plan for. I do think, like I looked at, not in this report, but in another article, I looked at transaction fees when they spike in general, and that's usually during bear market bottoms and bull market tops. So if you see that Bitcoin is really rhyming history, right? Like we can assume, or I assume we'll have a bullish year this year, but it's very likely that we'll also have a bull market top this year. So I would say as a miner, it's a good time to be online now, even though we're still at relatively low hash price levels. Because if Bitcoin price starts running, it will at a certain point outpace the hash rate deployment, and then the hash price will go up. And then if we reach a stage of the later stages of the bull market, the amount of transactions increase, because there's going to be traders that do quick trades and people want to make sure they can buy their Bitcoin. Exchanges will collapse again, I guess, as they have done in the past. Like if this demand picks up and people start transacting more and more on the base layer, then we can expect another spike towards the later stages of the bull market. So I think that's more predictable than any projects, runes or ordinal projects, unless you're very deep into those communities and know the launches of these projects. You can anticipate perhaps, but those transaction fees have been proven very volatile. Let's say they come and go.
Yeah, and as they say, better to have time in the market than timing the market, and that getting hash up today is a good strategy. So you make sure, as you were saying, you're going to catch that top if there are increased transaction fees, as we've, as you alluded to historically.
Yeah, and I've learned also that it's important to look at the pool that you use and the mechanisms behind the pools, because many pools, they calculate transaction fees like FPPS pools. They provide these transaction fees to the miners, but they calculate it on an average, and sometimes when there's a high volatility, you don't always benefit from it. So I've learned this year that there's much more going on behind the curtains at the pool level. So I would advise every miner dive into that, because it might be that there's these big spikes in transaction fees, but you're connected to a pool that calculates the transaction fee cut in a certain way, and you don't benefit from these trends in the market as much as you might have hoped to.
Absolutely. I think that's just good advice for anyone in Bitcoin mining or getting into Bitcoin mining. Figuring out the pool that you want to align with is massive when it comes to your overall strategy. The next section we dive into is ASIC hardware market, which is, we've kind of already touched a little bit around efficiency, but please talk to me about this. We have price dynamics. There's the daily profit of an SJ19 Pro at 100 terahash. Please.
I think what we've seen in 2024 was that the price was steadily declining for these machines, right? So that has to do a lot with the fact that demand wasn't that big and supply is there. But into Q4, you saw price picking up a little bit. So I have a gut feeling that the bottom is in. We might be hovering a bit around these low prices, but I think I don't expect for 2025 a further decline or a similar decline as we saw the first 3 quarters of 2024. And it's going to be interesting to see what's going to happen to these older generation machines, right? So What we've seen in the previous bull market is that once price starts picking up, these machines become highly profitable. Demand starts picking up, and machine prices they shoot up. In the 2021 bull market, there were these S19J Pros being sold for over $100 per terahash, and right now they're still below the $10 per terahash mark. So they even went to $3 I've seen, and lower if you buy in bulk. So they lost 95% of their value, but yeah, if the market is able to absorb all the machines that are out there, then and the profitability goes up, then these machine prices might go up again as well.
Not to create any FOMO for anyone listening, or maybe they in 2012 wish that they were mining, but I love in your hardware trends section, which is a bigger part of this particular section of the report, you say it's talking about the Avalon V1 that you alluded to. It says 2012, the world's first ASIC miner, the Avalon ASIC V1, was introduced, capable of mining over 25 BTC per day. While a typical desktop computer could earn just a few dollars worth of Bitcoin daily, the Avalon ASIC V1, priced at $1,500, payable exclusively in Bitcoin, generated $200 to $300 per day. That's obviously the fiat, but thinking about getting 25 Bitcoin per day, you know.
This is from a post from Charlie Shrem. He posted on really nice insights from back in the day, mining insights from back in the day.
Yeah, because if you read any of Anthony Power's PubCo articles that he produces for Compass, he will talk about a major PubCo, and they'll produce in a month like 40, 60, 70 Bitcoin. And that's something to, like, you know, yell from the top of the mountain. And you're saying per day. That means in a
so this was the first ASIC, so it had a big competitive advantage over the other computers that were mining. So that's crazy.
The arbitrage of hash rate is honestly quite mind blowing. You dive into some standardization of hardware design. You talk about Seal Miner, the mini miner revolution. I would actually love to touch upon that. How has that been from your view, the mini miner revolution?
Yeah, I think it's very cool to see. Like it's very close to the Bitcoin ethos, right? Like these people that use the BitX or other mini miners, they not necessarily are mining to become rich, let's say, but they like to contribute to the network and decentralize the network. But I think these mini miners, like especially the BitX, like there's a lot of do-it-yourself projects out there. I think it's a great learning tool, and I hope it triggers more people to work in the industry also, so that it's a gateway drug to become to become an employee or an entrepreneur in the mining space. So
I'm now waiting for the BitX creator brand garage brand to pop up that's like called the gateway drug, because I think it's totally true. I think that getting 1 terahash up on your desk, then with a little fan that you barely hear, but it's just like this. What is that? You know, it's a talking point. If you were to have that in your office environment or wherever at your home, I think it's totally a talking point. Moving through, we have new ASIC models. Bitmain offering a broad variety of Antminers S21s. We've kind of already touched upon this, that the joules per terahash continues to go down. MicroBT introduces the M60 series. Anything worth mentioning here? You have Aradyne coming out, BitDeer's Seal Miner. Do you want to talk about the Seal Miner, maybe?
Yeah, no, one point is that you quickly mentioned that standardization, right? You see more and more these U2 or U3 models, which are not your typical shoebox, but they're more like these standard server rack type of computers. I think that's a very interesting development, because the sizes of these machines have been so different. Even like an Antminer, like the S21 Pro had a different size from the normal S21, and like it's hard to standardize your infrastructure and your rack space if you have to deal with these prices in different sizes of machines. And I think seeing these more server rack type machines coming out is interesting because it will help in standardizing build outs, but also the more traditional data centers might be more familiar with the type of form factor, and maybe be more comfortable with running ASICs in their facility as well. Sorry.
No. All I was going to say is I think the standardization of the physical form of the ASIC is awesome, because I know, having visited a couple of facilities and talking to anyone who's on the ground running our facilities, it's just crazy when a new miner comes out and it may be a centimeter on either side wider or taller, and it throws everything off. And these are these small things that I don't think many people often think about, but this is why we talk about it on this podcast, so we can educate and inform if we have any customers or clients listening and they're like, oh, why is my miner down for even a day or 2 days? Well, it's like, well, we had to reorganize the entire rack because you actually have a piece of hardware that maybe doesn't fit in perfectly to the situation that most facilities had because they weren't ready for that. And then I wanted to build on that and say that I love the image that you have here. It says 2024 ASIC hardware launches. This looks like a poster you could sell on Etsy for complete Bitcoin mining nerds, and they could just put it up and be like, wow, that's kind of crazy. Because there was a lot of launches in hardware. And having not read the review you did in 2023, do you think that there was more, the same, or fewer launches in 2024 than there were in 2023?
Well, I haven't done the comparison, but my gut feeling is that there were less in 2023. I think since demand is quite low still for ASICs, that manufacturers like Bitmain, they come up with new products, let's say, to keep on driving sales. Bitmain has certain contracts with their chip weaver providers, with the foundries. They need to offtake these chips in order not to lose these contracts, because if you lose those contracts, it's going to be very hard to renegotiate those chips, because there's a high demand for chips. So that's also a reason why they kept on innovating, let's say, and producing new machines. It's been for some miners, it's been frustrating because they would order like a batch of S21s, and then a few months later the S21 Pro was announced, which was more efficient and had a higher hash rate output. So the frequency of launching new machines can be frustrating for some, but I think the main driver is because they need to sell in order to continue to offtake these chip weavers from the foundries.
That's a great reason. And it's just kind of great insight for people to understand why there's constantly a launch. Because I can imagine on both the consumer side as well as the fabricator or the creator side, if I create a machine and it's supposed to be the best in the world, right, or the most efficient, and then 2 months later, my competitor creates a machine that's better than me, I'm like, come on. Not only am I on the creator side, someone's probably throwing something across the boardroom in anger, but if there is a buyer of that machine, the retail buyer or the Clean Spark buys, I don't know, 2,000 of these machines, they may be like, wow, we should have waited 2 months, and you kind of get into this thing where you said it earlier, like, am I going to see and wait about what is next over the next couple of months? And one of the things now, continuing in that, you have a whole section here called ASIC Dominance, and you have an amazing pie chart which breaks down, it's from Coinmetrics, shout out Coinmetrics, breaks down all of the different miners within the industry. And was there any surprises here for you? Had you seen these data, and did this more or less align with
I've seen
what you've
data
got?
before. Like I said, Coinmetrics has really unique data. I think the biggest conclusion that can be drawn is that Bitmain is very dominant, right? Like from those charts, it says that over 77% or 76% is Bitmain machines, and even if there's machines missing on that data set, I know from people in the industry like that dominance is really huge, and that also comes back to those the access to chips, right? Like if you're new entrants into the market, it's difficult to negotiate or to get access to these chips because you need to do big orders in order to be able to compete with others. But also your R&D, the research and development cost for developing an ASIC is really high. So it's not for everybody, let's say. So that dominance of Bitmain is really something that stands out, and they keep on being dominant. But I think what's also standing out is that these S19s and S19J Pros together, those two models, they make up 50% of the network. And when you're like reading posts on X or reading the news, like it feels like everybody is buying these new machines, right? But then if you look a bit further, you see that there's still a lot of these other machines online, and it's not that everybody has these newest S21s and latest machines coming online.
Yeah, and just to break down the numbers that I see here on the chart, you have Antminer S19, 29.6%, the S19J Pro, 21%, and then the S19 XP, 13.2%. So
Yes.
when you add all that, it's about 63%, and I'm rounding a little bit.
Yeah, and then you have the S21 is about 4.1, and there's a little bit of S17 and even some S9s heating garages somewhere. So yeah, it's really impressive it's really maybe worrisome that Bitmain is so dominant. And it's also, I think very positive that companies like Auradine and Bitdeer, that they start producing their own hardware. And I think especially Bitdeer has been a special case that I've been following because they mine themselves, and it allows them to either produce machines that they rack themselves, or when market picks up, they have the flexibility to also sell these machines. Up till now, I believe the biggest part they've used for self-mining, and they renewed their fleet or upgraded their fleet based on these seal miners that they produced.
Yeah, this section is actually one of the bigger sections where you talk about ASIC, hardware, everything. So if you're in Bitcoin mining, you need to go click the link in the episode description and download this. Please go ahead and do that.
Even if you want to read the section, right? Like I understand, like it's a huge report, but you can just go to the table of contents, see what's of your interest, and then zoom into that.
Because I was going to say, yeah, there's a lot of Bitcoin mining nerds that may just skip ahead to that because I think there's just so much alpha in that, and it's multiple pages. The last section is the public mining companies, and I believe that you said that your co-author did most of this writing. And normally on this podcast and just in Compass, we don't really dive into what the PubCos do or the publicly traded companies, just because there's other people doing that work. Primarily, the people that I look to is Bryce McNally and Anthony Power with the Power Mining Analysis podcast. But I did want to ask you, so this goes through the IPOs, mergers and acquisitions, all the things that you would maybe minor revenue that you would kind of tie to this. But I did want to ask, do you want to mention anything from a narrative standpoint or anything more specific around the AI HPC narrative? Narrative is such a lazy
I think
term,
it's
you know what I mean?
so the narrative already started before in 2023, early 2023, but I think in 2024 it became such a hot topic because of the halving also, right? So margins were suppressed, and there's this big opportunity to run GPUs for AI high performance compute because it provides a premium. The Bitcoin miners, they would try to optimize for low cost, let's say, and AI high performance compute is in need of getting online, and they are willing to pay a premium. Running these type of data centers, which are very sophisticated, it's not for everybody. So it's also logical that these PubCos dive into this trend, because in order to run these facilities, you need to have very sophisticated cooling. You have to have redundancy because these these computers need to run 99.999%, sometimes up to 5 nines behind the comma. They need to be online, while miners can be switched off entirely, and like a 95% is a standard or industry standard, 95% uptime. So that high uptime requires redundancy in build out, which is expensive. And also, in order for it to be financially feasible, an HPC data center needs to have a certain size. So it doesn't make sense to put out one 20-foot container out there and start running GPUs. So it has to have a certain size, and then these GPUs they are more they take up more space, let's say. So the ASICs are more dense and require less square meter per computing power and per energy usage. So if you build out an HPC data center, you need more physical space as well. So overall it's very costly, but if you have a build out and you run it, it provides a premium. So I think it's logical that this year it was a big hype amongst PubCos because these margins on the Bitcoin mining side are very very low, and also the AI high performance compute. It's a stable type of income, right? Like it's being paid in dollars. It's less volatile than Bitcoin mining. So I think it makes sense that it became a hot topic this year. And then the other hot topic for the public miners, I think, is that MicroStrategy playbook. You saw that Mara, they started raising funds to buy Bitcoin, and then towards the end of 2024, also Riot and Hot 8 were hopping on that bandwagon. To add more and more, or to buy Bitcoin to put on their balance sheet. So that's a interesting trend, and I'm also I'm not a stock analyst, but I'm curious to see like how much investors will value that Bitcoin on balance sheet in this year, in 2025. I know from the past, like in the 2021 bull run, those that had a lot of Bitcoin were valued at a higher price by investors. It's an easy metric for investors to look at.
Yeah, those are some trends that were. It's interesting to hear you say that it started in 2023, continued in 2024. As we kind of come to the end of the episode and we come to the end of the report, is that a trend you think we're going to see continue, where attention and resources come from maybe the publicly traded miners or just the Bitcoin mining industry as a whole outside of the PubCos going towards AI? And what are some other trends that you think we're going to see in 2025? We've talked about hash price, hash rate, difficulty. We've talked about hardware. What are some other things you kind of have on your horizon?
Yeah, so with regards to this AI high performance compute trend, I think it's an opportunity also for the network. If these bigger mega miners start diversifying into AI high performance compute, it's less of these mega mines out there. It's going to be more decentralized. I also think these types of compute, they are willing to pay a premium for high quality electricity infrastructure. So it's probably pushes miners to go to maybe jurisdictions that are less reliable, or to energy sources that are that don't have the perfect uptime, let's say. So I think it's a competitor to Bitcoin mining, but I think it can on the long run have a positive impact on the network as a whole, because it will drive decentralization and in the end also more innovation in the space. So another competitor out there, even though it's already a very competitive space, will only drive innovation. So so for next year, or for this year, still with my mind in 2024, I think if you look at the hardware side, I'm looking forward to the first announcement of a machine that has 1 petahash of hash rate output. Bitmain already announced a machine that has 860 terahashes. So I think, we'll see that this year. A company saying that they're producing a 1 petahash machine. That's going to be interesting. And then machines going down to that single-digit efficiency rate is something I'm looking forward to. And then I'm curious to see how many more miners will adapt this Bitcoin treasury strategy, that MicroStrategy playbook, in order to become successful in the market. What else? I think if price starts running, like if it continues its path that it took the last few months, then a price will outpace the deployment of new machines, which means that difficulty will adjust in a slower rate, and price will go up, and then hopefully we'll have better times ahead for miners.
That's what I'm hoping. I'm hoping for better times ahead. It's just interesting to hear that the hash price before the halving was just juicier than it is now. And I think it would be great. So yeah, you will need the price to greatly out compete the hash rate, or the hash that's online. So that way the difficulty kind of stays within check. We could probably talk for a lot longer. And this was a snapshot of the report. The report's about 70 pages. And I think if you go through and you properly read it, it's a couple hours. So I do hope people go click the link in the episode description, download this. It's super valuable, as we even just said. And as Nico, you said, even if you just want to go through and cherry pick the things that you want, the hardware alone, I think, is absolutely fascinating. And then obviously, if you are investing in publicly, PubCos, publicly traded mining companies, there is a great part of the report that's done by your co-author as well. So, definitely thanking the collaboration and thanking NiceHash. If people want to get in touch with you, where should they go ahead and do that?
Yeah, so I'm quite active on X and LinkedIn also. So my business is also oriented towards other businesses. So LinkedIn is something where I provide quite some analysis as well. But also on X, I share content. So probably in the weeks after the report launch, then I'll share a lot of snippets on social media. So that's I would say the go-to. And then if you appreciate the content, then feel free to subscribe to the newsletter, which is a weekly analysis looking at mining economics and trends and innovations in the space. So highly focused on Bitcoin mining.
Nico, this has been absolutely great. Thank you for checking this out. And if you're in Bitcoin mining, like I said, please go ahead and check out the episode description. Click on the link, download this today. It is out today. If you're watching on YouTube, please subscribe. You're listening on a podcast platform, please go subscribe, and make sure you find us on LinkedIn, X, and YouTube at Compass Mining, and make sure you're following for more. Nico, thank you once again for hopping on, running through the report, and I'll probably see you on Talk Mining Tuesdays.
All right.